All right, time for the latest from the eNCA Money Desk. Of course, we've got our business editor, Devin Morgan, in studio with us. So, Devin, the insurance industry is reeling from the power cuts as well.
Yeah, and you know what the next step is? We had so many of these claims increasing that there's concern now that it might just hit the premiums. And that's where we started this story, with the power cuts continuing. As I said, insurance claims for related damages are rising. The South African Insurance Association warning that premiums will also have to go up. I want to speak to the association's General Manager for Insurance Risks, Pam Ramagaga. Pam, thanks very much indeed for joining us this afternoon. So, you know, we've had the likes of Momentum, Santam on the show over the last few weeks, and they've all confirmed that load shedding related claims have indeed been escalating. Is this what we are seeing in the sector generally?
Yes, thank you so much for the invitation. With the increased load shedding, we're seeing increased claims, the likes of power surge claims. So with that comes, obviously, you have to risk adjust when the risk element increases. And that's where you're seeing premiums being increased. So what you've just reiterated is actually quite correct.
Well, that's the one part of it, but there's also, you know, some concern, I would imagine, depending on which side of the equation you are, that insurers are slowly moving away from paying out load shedding claims, either by sort of adjusting their policy a bit or slightly tightening it, because the fact of the matter is these things are increasing and there's just so much provisions they have to take care of it. Is this something we should look out for, the fact that they may very soon not cover this?
Well, currently, power surge is an insured event. And, you know, with any kind of risk, when you are experiencing a lot of claims, you have to adjust that particular, you know, your risk appetite, you know, with regards to that particular risk for your own sustainability, because you have to protect all the other policyholders who are not claiming for power surge claims. So that is the trajectory going forward, and we're seeing more and more load shedding. The insurance industry has to adjust to acclimatize their books to make sure that they can sustainably retain, you know, these kind of covers. There are some covers that might have been changed in terms of, for instance, your public utilities business interruption cover. Whilst, you know, historically it might have included physical and non-physical damage, you might see going forward where the non-physical damage element is starting to be kind of sunset gained because of the exposure and the risk element that comes with it. With regards to what you will find normally in a personal lines type of claim or residential type of cover, where power surge used to be a free cover for about 5,000 rands, it might now be included as additional cover, so the client would opt to take the cover, and with that obviously comes additional premium. So if you opt to take it, you'll be charged premium for it. So that's just normality how things work in terms of when you are underwriting a particular risk, you need to risk adjust it if that particular risk is migrating itself or augmenting itself.
Yeah, but the other thing you warned about this week, or your association at least, is the fact that consumers should not assume that everything damaged by a power cut can be claimed for, and that's very important, isn't it?
That's very critical. I would always, I was a broker for 17 years. I will always advise my clients to understand what they cover, to understand what the limitations of the cover is. And if the policyholder doesn't know, the best case scenario is for you to engage your broker, who's there to advise you. Or alternatively, if you have no broker, then you contact your insurance company direct. And they will guide you in terms of what your cover limitations are, or even exclusions. So there are, you know, understanding your policy is very important. Contract certainty is very important. So you're managing your expectations when you have a claim.
Yeah, and you're probably speaking from having experience of seeing some of these claims. But let me ask you this. With the power cut related claims surging, you're also seeing fraudulent claims coming through, as I understand it. I mean, some clients claiming for damages that were not related to power cuts or load shedding, but in fact damaged in the past. And you see this sort of thing creeping in with many of the insurance, are you?
I don't know in the granularity of it, because I sit in the trade association side. But, you know, insurance companies have their own internal processes might differ, in terms of how they're managed or how they're positioned or the systems being used, but there is a system in play to weed out any type of fraudulency. For instance, my previous company, there's some voice modulation to hear if the person who's actually claiming is lying, or there's an element of dishonesty in them, in claiming. So there's all kinds of technologies that can help insurance companies to weed out any type of fraudulent claims.